Welcome to the product discussion for Set for Tomorrow. Set for Tomorrow is a traditional life insurance plan that can help our clients when it comes to their income protection need. In this module, we will be going over the different features and the benefits our clients can receive from Set for Tomorrow. In Set for Tomorrow, we get to protect your family's lifestyle. Help your family maintain the life they lead even after you're gone. This easy apply affordable plan offers trusted cover for you and your family. Now let's go over the different features that we have to offer in Set for Tomorrow, from the death benefit, terminal illness benefit, overseas or repatriation benefit, funeral benefit, spouse extension benefit, and our waiver of premium. So let's start with our first unique feature, that is the death benefit. Now, under that benefit, we guarantee 100% coverage. So if the insured person dies, the beneficiaries can claim 100% of the sum assured. Okay? So we get a guaranteed 100% life insurance protection against unforeseen life risk. Our next feature is the terminal illness benefit. Now, when we say terminal illness, this is a medical condition that can no longer be medically treated. And because of this condition, the insured person is sadly going to die within 12 months. Okay. Now, if that's the case, the insured person does have the opportunity or an option to actually advance 100% of the death benefit and claim 100% of the sum assured. Now, if we do so, please do remember the policy will terminate and the beneficiaries no longer have any death benefit anymore. Our next feature is the overseas or repatriation benefit. So if the insured person dies while abroad, we are going to provide an additional 20% coverage amount, or 500,000 pesos, whichever is lower. This will be provided if the unforeseen happens to you while overseas. Okay, so thanks to this feature, we can provide the beneficiaries the amount they need to return or repatriate the remains of their loved ones when they passed away abroad. Our next feature is the funeral benefit. So with this feature, this would be used for funeral expenses. Okay? Now take note, this is being given in advance. So we can advance 10% of the life insurance coverage, or 100,000 pesos, whichever is lower. Okay? This will be given in cash in advance within the next 48 hours. Now take note, I did mention advance. Since it is an advance, this 10% or the 100,000 pesos will be deducted from the remaining benefit that we will provide to the beneficiary. Our next feature is the spouse extension benefit. So you get an additional 100% coverage amount if the unfortunate happens to you and your spouse as a result of the same accident, provided there is at least one child below 18 years old. So first of all, the requirement is the insured person should be married. Both husband and wife got into a same accident, and that accident sadly resulted into the death of both husband and wife. Now, if they have a living child below 18 years old, we will double, or we will provide an additional 100% of the sum assured. And lastly, this plan comes with a waiver of premium. So in case the insured suffers a total and permanent disability, or diagnosed with any of the 42 major critical illnesses listed in Set for Health, we are going to waive all the future premium payments. Now, Set for Tomorrow, it does come with three different variants, or you can consider this as a separate plan. Okay, so you got a variant called short-term cover, you got a variant called income protector, and you got a variant called estate protector. let's start with our first variant, short-term cover. Now, short term cover is a term insurance. When we say term insurance, it is temporary in nature. So you got to pay for the plan for you to be covered. The moment you stop paying for the plan, we no longer have coverage anymore, similar to that of a car insurance. Okay? Now, short term cover is a plan designed for individuals who are applying for a mortgage or a short term loan. So it could be used as a form of a mortgage redemption insurance. For example, if the insured person has a house that he's currently paying for, if the person dies, the family would need to continue the mortgage payments. Okay? Now, if you have short term cover, you can use the proceeds from this plan to cover the remaining obligation, okay, that family may have to the bank, and at least the family will have a house to live in. Or any other form of short term loans as well, such as car loans. Now let's go over the key features that we have here in short-term cover. So let's start with the coverage period. Okay, so when you sign up for the plan, you have two options. You can either get coverage for 5 years or you can get coverage for 10 years. Okay, now that leads us to the next feature. At the end of the 5 or at the end of the 10 years, if you would like to renew for another 5 or 10 years, yes, you can. So we have a guaranteed renewability feature. When we say guaranteed, there's no need for underwriting anymore for as long as the coverage remains the same. Okay? And our next feature is, eventually, if you do decide that you would want to convert this into a permanent plan, such as a VUL plan or our set for life plan, you can do so after the 5 or 10 years of coverage, provided that the coverage remains the same. Now let's go over our next variant. This variant is called Income Protector. Now, Income Protector is designed for breadwinners and individuals who are working on their prime. Why? While you are a breadwinner, while you're working on your prime, you normally have dependents, right? Who are dependent on your monthly income. So if the insured person dies, at least the future income of that family will be protected. Now, this plan is also perfectly designed for OFWs. Why? Because remember, we have a feature called overseas benefit. Yeah? So this plan is for those clients who do not have any previous exposure to insurance and who would want to avail one at the minimum risk and cost as well. Now let's go over the key features we have here in Income Protector. First of all, this provides a guaranteed life insurance coverage. So you got three options when you sign up for the plan. You can either get coverage up to the age of 55, 60, or 65. So those are three options. Okay? A second feature, this plan does come with a waiver of premium. Okay? So if the insured person suffers from a total and permanent disability or is diagnosed with one of the 42 major critical illnesses listed in Set for Health, we can waive all future premium payments. And lastly, in case at the end of the term, if you would like to convert this to a permanent plan or to our VUL plan, yes, you may do so as well. Now, for the last variant, that is Estate Protector. Now, Estate Protector is designed for individuals who are focused on the need to preserve their wealth, such as retirees and empty nesters, and allows a smooth transition of that wealth to that family members. So, this plan is perfectly designed for the need to pay that estate tax when that need arises. Now, how do we do so? Their wealth, such as retirees and empty nesters, and allows a smooth transition of that wealth to that family members. So This plan is perfectly designed for the need to pay that estate tax when that need arises. Now, how do we do so? We do so by taking a look at the key features. We do so by providing a guaranteed life insurance protection coverage up to the age of 120. Okay, so this time, this is a whole life plan. Okay, so in case the insured person reaches the age of 120, don't worry, that benefit amount would be paid to the insured person. Okay. Now, aside from that, this plan does come with a waiver of premium as well. So if the insured does suffer a total and permanent disability or gets diagnosed with a critical illness listed in Set for Health, we can waive all future premium payments. Lastly, if ever they would like to convert this plan to a VUL plan, they may do so as well. Now, for you to purchase this plan, the minimum annual premium requirement for Set for Tomorrow, regardless of variant, is going to be 21,000 pesos. Okay? At the same time, we do require a minimum sum assured of 1 million pesos. Okay? Now, for the issue ages, for short-term cover, both 5-year and 10-year variant, our minimum issue age is going to be 18 years old. Maximum issue age would be 70 years old. For income protector, for the variant up to age 55, issue ages would be between the age of 18 to 50 years old. For the 60-year-old variant, issue ages would be between 18 to 55. And then for the 65-year-old variant, issue ages would be between 18 to 60 years of age. Then for the estate protector variant, we can issue this plan to anyone between the age of 18 years old up to 70 years old. Now let's go over the policy management. Let's start with short-term cover. For the 5-year variant, you have two payment terms. Either a single pay or one-time payment, or you could pay yearly for the next 5 years. Same goes with the 10-year variant. You either have a single pay one-time payment or you can pay yearly for the 10 years. Okay, now both those variants do not come with waiver of premium. Okay, now for the renewal, take note, you can renew both 5-year and 10 years up to our maximum renewal age. Okay, now for the coverage here in short-term cover, we do cover up to the age of 80 years old. Okay, let's take a look at an example. We have a policy owner who's 27 years old who purchased a 5-year Set for Tomorrow short-term cover variant. Now, he can only renew his plan for 9 times. Okay, specifically, that would be at the age of 32, 37, 42, 47, 52, 57, 62, 67, and his last renewal can only be at the age of 72. Now take note, this client can no longer renew at the age of 77 anymore. Why? Because if he does renew at the age of 77, that would go beyond our coverage period, which is up to the age of 80 years old. Now let's go over income protector. Let's start with our first variant up to the age of 55. So you got 4 different payment terms. You got a single pay, you got a 5-year to pay, you got a 10-year to pay, or regular pay. When we say regular pay, the client is going to pay up to the age of 55. Okay? For the waiver of premium, for single pay, obviously there's no waiver of premium because the plan is fully paid. So the waiver of premium would come in the 5 pay, 10 pay, and paid to age 55 variant. Now this variant will expire at the age of 55. Our next variant is to age 60. Same 4 different payment terms. Single pay, 5 pay, 10 pay, regular pay. Just like our previous variant, single pay does not have a waiver of premium. Okay? So waiver of premium would come for the 5 pay, 10 pay, and pay to age 60 option. Okay? Now, this would expire at the age of 60. And a third variant is to age 65. So same payment terms, single pay, 5 pay, 10 pay, regular pay. Just like our previous variants, no waiver of premium for the single pay. You do, however, get it for the 5 pay, 10 pay, and pay to age 65. Okay, this variant expires at the age of 65. Now, yes, this is a term insurance as well, but take note, this plan is not renewable. Okay, so the policy will terminate upon the end of the coverage period and no benefit will be paid out. And for our last variant, we got estate protector. So you got four different payment terms once again. So that's single pay, 5 pay, 10 pay, and regular pay. Now take note, for the waiver of premium, there's no waiver of premium for the single pay and the regular pay variant. So waiver of premium would come with both 5 pay and 10 pay variant alone. Okay. Now, if the insured person is 61 years old and above at the time of application, we will also be not including the waiver of premium part of his contract. Okay, so this plan would expire at the age of 120. Now, for estate protected, this is not renewable, but if the insured person lives up to the age of 120 and has no claim from the terminal illness benefit, the sum assured will be paid out to the policy owner upon the expiry of the policy. Now let's go over a couple of FAQs here. First question, how does the convertibility feature work? So the policy owner may convert his or her policy by writing to FWD 3 months before expiry date, given that the policy is in force for at least 2 years, the insured is 70 years old or younger, and there is no claim to be paid or due to be paid under the policy. Now take note, the sum assured under the new policy must be the same or lower as the sum assured of the original plan. Otherwise, underwriting will be required. Question 2. Is it possible to change the sum assured of my Set for Tomorrow policy? Answer is yes. You may increase or decrease your sum assured within 1 year after policy inception or renewal. Okay? The policy owner will need to pay the additional premium and complete the necessary requirements for evaluation before any increase in sum assured can be processed. Question 3. Can the premium paying period be changed? Yes. The premium paying period can be changed if the allowable age for the pay period of the variant is met. The change can be elected within the first year of policy inception. And question 4. Does the premium amount increase every year, similar to that of yearly renewable term policies? The answer is no. Premiums are level across the pay period, provided there is no change in the sum assured, and change in sum assured triggers change in premium. Now, for Set for Tomorrow short-term cover, premiums may increase per renewal and will stay at the same level within the next 5 or 10 years depending on the variant. Now let's go over the exclusions that we have here in Set for Tomorrow. Now for suicide or self-inflicted act, we will not pay any death benefit, funeral benefit, or terminal illness benefit if the claim arises from suicide or a deliberate self-inflicted act by the insured person within 2 years after cover starts, reinstated, or is increased just for the increased amount. We will refund all premiums you have paid, less any outstanding loans and any unpaid premiums. Now take note, there's no exclusion for suicide while insane. So we will pay the benefit if the insured person committed suicide while insane.